Welcome to TradeTheMBI.com. This is John. This report is for the 29th of January. Nothing happening in the world. We didn't see U.S. soldiers killed. Congressman calling for attacks on Iran or additional shipping catching fire in the Red Sea because the market says nothing is taking place. However, we are seeing underlying softness here. Short-term buyers from the DOC standpoint, steel, if it dips below negative 13.5, you would definitely expect a revisit to the ABM yellow and or potentially even a little bit further down to the green. DOC spread potential where cyan overtakes green and crosses above red, where we would go from the always a buy configuration to, yes, potentially a little bit of selling. MBI magenta here still well above the 33 and no major short activity despite all that's taking place. And when we look at it from an NQ standpoint, NQ's been a little bit weaker, but again, there's not a whole lot of short activity with that. The MBI white continuing to fade. Yes, you're crossing below the positive 33 here with the magenta and that, fine. That's going to create some softness, which it did, and no big deal. In fact, you got a couple more positive extremes to fill back in there, which will take you slightly below the 76%, but imminent, not necessarily, but there's a little potential. You can see that the readings are a little bit different for the NQ. It's been stronger, and so it's a bigger spread between where the DOC cyan to red ratio is in that. So shrugging off all of the news because that's what the market does, and mostly here, you got nothing happening in the bond setup situation, and with that, where are you going to put your money? You're going to go into the market because you're going to need some kind of return that's going to be relative. Now, this is a disaster zone. That press of oil now getting close to 80 with the tensions as they rise. This is something we were talking about. Fed isn't going to be moving anywhere if inflation starts to peak back up. And we're going to have to pay attention to this coming in the next, days, weeks. But, as this eased off and you're now putting pressure back on, you just get a rate of acceleration. It's the momentum of things, and that's really a monkey wrench in the whole scenario of everything's wonderful into the election, and we can just cut rates to make it look like everything's good. Not going to happen. From a eurozone standpoint, that continued nothing. It's a good bonus. The ECB thinks that they've got things well in hand when they're increasing growth projections within stagnating economies. Actually, I think France was so this morning shut down with the farmers again blocking it because they just keep taking farmland off production, and for the global warming construct, that creative stuff. I gotta admit, they do some really interesting things in this region. From a gold standpoint, starting to peak up, and this is going to accelerate now with oil. Be prepared for that one. And the cryptos, nice little bounce back. They're getting a little oversold from before. It's just a question of we saw this when we dipped down here, and we were talking about automatic reaction back up from when we get into that negative 24 space plus. This was negative 2367, and so it did the expected usual. Interesting though that ETH had suffered more, even though it had moved more than Bitcoin, and then also didn't recover as much. So, relatively, it remains weaker to the Bitcoin situation. You can see the muck we're in right here. Now you've created what everyone's going to be screaming double tops or triple tops, and they make up all sorts of configurations. But at the end of the day, we had a 50% retrace, magenta over yellow. It's all good. Not enough to be scary. Like we were talking about here, we see the pop up, faded back, neutralized back to the opening level, and finished slightly lower. And then we dipped down lower in the post market to see if we could clear any stops. Did that, and then proceeded straight back up. So that's the long and the short of it. We just call the market an ostrich. It's got its head in the sand, but this is what happens. There are always these periods, and it's always going to be in the pain period that you get the biggest up run because it becomes a slow, methodic inching forward because of the uncertainty. And what else are you going to do? And then you get behind if you we're on the sidelines, and then they have to play catch up, and that even further accelerates it. So that's the dynamic at play. Just be aware of it. Doesn't mean we're not going to get good ranges in between intraday. So, as always, trade well. Have a good one.